Holy smokes, everyone. The moment we have all been waiting for, the moment nobody thought was going to come, but now it is officially here. The housing market downturn has officially begun, with the US housing market recording its first price declines. Now, this is welcome, amazing news, because there's been many people struggling to buy a home or getting into the housing market, or they thought they'll never be able to afford a home and were facing one of the biggest housing crises in 2 decades. So in this video, I'm going to be going over the latest data that shows there's a huge shift coming in the housing market, and I'll also be going over some other signs of what's going to be happening in the future. So let's not waste any time, everybody. Let's get straight into it. So have a look at this, everyone. 3 signs that the housing market is starting to get better after a historic affordability crisis. What are these 3 signs? Let's have a look. So listen to this, everyone. New data suggests it was wise to wait. Various indicators from real estate website Redfin signal the market hit its peak in July before reversing course. If the latest trends hold, houses could get more affordable for the first time in 2021. Alrighty, so look at this, everyone. Selling prices are reversing their climb. Now, it says here the median price of previously owned homes fell 0.2% in the 4 weeks ending August 1. Now, I know you may be thinking, what? 0.2%? That's nothing. There's no downturn coming here. House prices will keep going to the moon. Well, something you have to know, everyone, the market's not going to go from rising 15 to 20% to then all of a sudden collapsing 20% in 1 month. That's not how the markets work. It's a very slow and gradual process, and also it takes a big shift in people's mindset with fear or greed. We've had a lot of greed in the housing market, but once people start to realize house prices are flatlining, well, then the urgency, the FOMO gets taken away. Then once they start to see the prices start to fall, even by just a little bit, that fear or hesitancy starts to set in. And what that does is that takes demand away, and then that's when the price declines start to accelerate. So let's keep looking at the data here, everyone. So it's a small change, but it's in the right direction. The reading snaps 5 months of record-setting prices and marks the first decline since early March. So as we can see here, the housing market has been going crazy, up 18% year on year, and people, that is just unsustainable, and it's not going to continue. So listen to this, everyone. If these trends continue, home buying conditions will likely improve relative to earlier in the summer, with more options and less competition for buyers. Because what's been fueling this crazy housing market was there's literally no supply, and people were getting into these crazy bidding wars. And I'm sure you've seen in the news and articles where people were paying, 10 to 20% above asking price because they had to secure a home, and many people were paying $50,000 over the asking price in fear that they won't be able to secure the home that they want. So inventory is bouncing back. This is what we need, people, for cheaper house prices. We need more choice for buyers so they don't have to get in these crazy bidding wars, and so the power actually goes back to the buyer and they will get more of negotiating power. So the cooldown seems to be 2-pronged. Weakening demand puts less pressure on prices, and greater inventory stands to give buyers more options. Putting more homes on the market cuts down the bidding wars that sent prices skyrocketing through the pandemic. So Redfin's report matches trends in government data. The monthly supply of homes in the US rose to 6.3 months worth in June, its highest level since April 2020, and nearly above its pandemic era peak. And what you have to know is once the total amount of US homes hits 7 months supply, well, then that's when we hit a bear market for the housing market. And when you look over history at the chart, when there's been a 7-month supply, that's when you start to see price declines, because there's a lot more options for buyers and they can put in lower offers. Okay, so the third sign here, competition is fading. So sales aren't closing with the same fever of a few months ago. So for one, the average home spent 16 days on the market, up from the low seen early in the month. Rapid fire purchases became the normal this year as buyers rushed to close deals before getting outbid. So we can see here in this chart, the days on market is slowly increasing, and I expect this will continue to increase. And so it says here, for the first time since at least 2018, affordability was the main reason people were unable to buy a home. According to the National Association of Home Builders, the Housing Trends Report, bidding wars, the top cited reason in late 2020 and early 2021, dropped to their second highest spot on the list, suggesting that competition that characterized the housing crisis calmed somewhat. It's not just buyers hitting the brakes, the share of listings with price drops rose to 4.7% in July, the highest since early 2019. The gauge is also on a strong uptrend, signaling sellers are coming to grips with the fact that buyers have had enough of such lofty prices. So the moment we've all been waiting for, some people thought it will never happen. We are starting to see a correction in the housing market. Things are going to get back to normal. Things will calm down. Now, the big reason why prices exploded so quickly was because interest rates were dropped so quickly. The Federal Reserve dropped interest rates by 1% in a matter of a couple of months. So when interest rates drop 1%, house prices or people's borrowing capacity increase anywhere between 10 to 15%. So that means they've got a lot more credit they can use to go out there and bid up prices. But now these lower interest rates have been priced into the market, and people can't borrow these crazy amounts for these crazy housing prices. Even with these low interest rates, their credit is maxed out. And even though the eviction moratoriums and the foreclosures keep on getting extended, eventually people will have to face the music. Eventually it is going to have to happen. All they're doing is buying time and trying to avoid the inevitable. But unfortunately, there is going to be some evictions. There will be some foreclosures. And we're seeing small mum and dad landlords getting squeezed out of the market, or they're just getting fed up and they're saying, look, I'm fed up with, having to have this investment where I'm getting no return. Maybe I'll just dump my property, buy some shares, buy some crypto, buy some precious metals where I don't have to deal with tenants. And on top of all of this, we've got inflation running hot. Inflation is still over 5% year over year. So if the Federal Reserve has to taper its mortgage-backed securities purchases, which the Fed said it was going to start doing before tapering its US Treasuries, well then interest rates will slightly creep up as well, putting more downward pressure on house prices. So everyone, what do you think? Do you think we're about to see a big shift in the housing market late 2021 or early 2022? Let me know down below. I just want to say thank you to all my loyal viewers and subscribers. We've hit 65,000 amazing subscribers. Your support is overwhelming. I'm loving the community we're building here, and I appreciate you taking time out of your day to watch and comment these videos. And hey, I also enjoy hearing your thoughts about the market as well. Now, if you're bored, I'll put up some other videos here. I'll see you all there.